Crude has been in free fall since late September, down nearly 20% from recent highs, tumbling below $75 a barrel today, the first time since late July. So where is oil heading? Let's ask the chart master, Carter.
So it's an interesting juncture. We ourselves, just for what it's worth, we published a note today say we're closing the short. And so the short from late September, we're down almost $20 a barrel. And at this point, I would just be flat, which is to say, just because it's down doesn't make it a long playing for a bounce, but it is down enough where I think it's a bit overstaying one's welcome to retain shorts.
Yeah. What do you think, Russ?
So I think the SPR is probably going to be replenished, and the administration hasn't done a great job. They've telegraphed it so people jump in and buy oil. I think Carter was right to close out that position because I think there's going to be some stability in the price of oil. And those large integrated names haven't performed very well, even with all the M&A that's going on. So you have to sort of fish through and see who's going to be the next candidate to be bought out. But ExxonMobil, Chevron, their charts to me seem very bearish. I would stay out of energy right now.
Julie?
I always stay out of energy. It's just so hard to find businesses that aren't commoditized. And so it's never a space that I'm very interested in.
Yeah, although, Guy, I think that you would say, no matter where crude oil is, these stocks can do well.
No, but it seems to me, now, kudos to Steve and Carter, they've been on this. I'll say this. It feels as though somebody or some group of companies are getting absolutely blown up. Short bonds, long energy, probably long the dollar as well. And there's been this massive unwind that probably technology is getting a lot of the sort of the kickback for. And you're seeing it in terms of the stock prices. But fundamentals really haven't changed that much. And I was one of the people that thought when you heard all that M&A announcement, that would be the next catalyst higher. That was wrong, but it doesn't mean it's not going to happen at some point. So I would stay with the space despite its pullback.
It wasn't too long ago we were saying that Saudis are going to want to push oil to 100, and that was almost a foregone conclusion, yet here we are. Carter, I'm just curious, is there anything in the charts that tells you that this is, as Guy points out, maybe a move that was a technical move of some sort because of positioning versus just
the move in crude was just, it's the equal and opposite moment of May and June. It's $65 a barrel, hard landing, recession, crude's going to 50. There's something called recency, and we're all sometimes prone to fall into that trap. And then, of course, when it starts getting to 80, 85, it's going to $100 a barrel. It's sequencing. Sometimes you get too far in one direction or the other, and then it's right to say, hey, we'll move the other way.
And the truth is, oil is always in a trading range. And then the geopolitical aspect of it, we were worried about the war in the Middle East escalating, and it hasn't done that. So the commodity always overshoots on any type of risk to what Carter's saying. But the sweet spot for the Saudis, for the Russians, for everyone is probably in the 80s, because once it gets to 100, it gets too expensive and people back away from it, and then you see that demand shock happen.